are all doing fine. Oh, my bloody hell. Where's my mic? Hope you're all doing fine and dandy. Welcome to this afternoon's session on payments as a service. First of all, I'm going to introduce myself, first of all. I'm Ali Paterson. I am the founder, editor, and fire marshal at FF News. This is the most important thing. Could everyone please get out their phones, go to ffnews.com and subscribe. That's the plug done. Everyone please do that. Fantastic. We're going to be talking about payments as a service. And I want this to be the best session here at ePay that you've been to today. I certainly want it to be a lot better than, where's Amelie? A lot better than Amelie's session, which is following this one here. But to do that, I am going to need your help as an audience. So I'm going to pick on a few people. And Olivia, you've made eye contact, so I'm coming to you first. Olivia, what do you want to get out of this session about payments as a service? What is it that you want to find out? I'm going to lower my microphone there, so no pressure.
I guess real examples of where it's impacting end customers and making their journey more, hopefully, enjoyable and seamless. Brilliant.
Cheers. Cheers. This wasn't prep, but I'm glad that we did that. I'm going to introduce the panel in a second, but we want to find out a lot about some real examples of payments as a service. I'm going to pick on somebody else as well. I'm going to pick on you, sir, because you're smiling. What would you like to get out of this session as payments as a service? Like, why are you in this session here?
Yeah, no, I'm not sure if that is working. I'm interested in the user cases that drive the industry and will drive growth in the future. It's probably a bit the same, and the commercial drivers behind that. Why will the consumer use that type of payment, and what are the economics behind it?
I like that. So as well as the user cases, it's also to make it financially viable, because you can have all these wonderful things which, frankly, if it's not going to be commercially viable, no one's going to use it. I'm going to get one more person. So anyone, yes? Oh, he's taking a picture over there, but I'm putting that as a hand up. You, sir. What do you want to get out of this session? What's your... Oh, I mean, I know you probably want to... So I'm getting feedback on the what's it thing there. I probably know you want to rib Alan a bit, but what do you want to get out of this session?
No, I wouldn't do that. No, to understand kind of the risk and how you can protect those customers as well and businesses. So, yeah, that's pretty what I'm trying to get out of it.
Protection from customers?
Yeah.
There we go. Right. That's our brief as to how to make this the best session here at ePay. I want to introduce these panelists. We've got quite a good selection of panelists here. I'm going to make the AV guys a bit happier and sit back down. First of all, we've got Matt. Where's Matt Komorowski from Volt? Guys, a little round of applause. Let's break the ice a bit. Round of applause if you know Matt, especially. Cheer if you know him. Right, we also have Alan Nagle, who is the founder and CEO of Crypt.io. Give us a round of applause for Alan, especially if you know him. We have Stephen Wright, head of... Oh, they're down there. Makes it easier. Head of Regulation and Standards at NatWest. Can I have a big round of applause, especially if you know Stephen? We also have Kellyann Ripnar, who is the COO and co-founder of FinCrime Dynamics. Give us a round of applause, especially if you know Kellyann. And lastly, and I'd like a really, really big round of applause because I'm going to really embarrass him. This is James's first ever panel that he's on today. So,
thank you very much, Ali. Appreciate it.
So, big round of applause if we know James Kind. He's the growth manager at Open Banking Excellence. Right, panel. So, an audience, please keep in the mind, at the back of your heads, any questions. And if you can't come up with a question, because I am going to pick on some people, if you can't come up with a question, I want like a brag, a fact, or a suggestion, or something that you can throw on to the session instead. Right. Panel. First of all, let's have some real-world examples. And James, as it's your first panel, we're going to you first. You guys at Open Banking, you've got your Open Banking Index, which please check it out. It is fantastic. Give us some real-world examples of some of the best cases you've seen of payment as a service. Over to you, James. Let's hear
Fantastic, yeah. So firstly, just to kind of set the scene, this year we launched our Global Open Finance Index, which is a pioneering piece of industry research that provides by far the most detailed data-driven view of open banking and open finance. Alongside our partners, which include NatWest, we now have a single source of truth for benchmarking the progress of open finance across the world. The index highlighted, that the UK has the uncontested lead in open banking, but we can't rest on our laurels. We need to act quick if we are to, remain world leaders with a fast-moving group of countries around the world behind us. A use case that we're particularly kind of proud to kind of showcase here in the UK, and arguably one, if not, the best in the world, is the HMRC example, making history by becoming the first tax authority in the world to integrate open banking, by their systems, which we kind of highlighted through our Open Finance Index as well. The EcoSpend, powered service enables payments directly from a payer's bank account, with millions of customers having used the Pay It by Bank technology to make in excess of 14 billion worth of tax payments to HMRC. I think that was as of March this year. But other countries as well are kind of making significant progress when we come to kind of talking about open banking and open finance. Take, for example, Brazil, which has the fastest open banking adoption rate of any country in history. It's one of the reasons why, a lot of the world are paying close attention to Brazil. Despite being, relatively newcomers to the open banking scene, Brazil reached 5 million connected account mark less than after the first year implementation deadline actually passed. A feat which took 4 or 5 years in the UK as well. So there's a lot also going on across kind of Australia and India, which we covered in our index as well. So as Australia move through, from open finance to open telecoms, etc., India doing a lot around kind of a data bill. As of the UK, we're currently passing one through Parliament as well. So there's a lot going on. I'd definitely encourage you to download the index and check out our OBE website if you haven't already done so. Certainly an interesting read, a bit of light reading maybe over the weekend. But yeah, also another example finally before I let someone else speak. We kind of talk around, VRPs, which I'm sure is an acronym that will be covered many times on this panel as well. So it's great to see after, the recent JROT report coming out that is firmly in kind of close, kind of, I don't know what the word is, but I think everyone's talking about it with a red hot relevant debate a couple of weeks that we had at OBE about it. I'm sure kind of Stephen can shed more light on that one as well. Thank you.
On that note, has anyone used the EcoSpend on HMRC, the payments one? How fucking good is that? It's so easy, especially when it's over the 21k amount that you have to pay, and it's a whole thing. Right.
Oh, that is the biggest open banking use case.
Oh, bring it in.
Paying your credit card bill is.
Yes, excellent. Let's expand on that. What do you mean by paying your credit card bill? Give us an example as to how you've done that at NatWest.
So we haven't done it yet, but
Okay.
if you look at Lloyds, you look at American Express, you look at Tesco Bank, etc., they're actually driving customers to pay their credit card bill that way.
Excellent. Alan, I want to come to yourself. Have you got any examples in the real world of payments as a service and open banking being utilised accurately and utilised well?
Well, in the real world, we all know about Credit Kudos and Freddie there that got sold to Apple for 150 million last year. He did a great job at understanding the risks around understanding bank accounts and how to access bank accounts and the way people behave with their payments and how they transact with their bank account, how they withdraw money, what times to withdraw money at, and how their spending habits are in order to create real-world examples of how to credit score people in real time through open banking. So I think it's one of the best use cases because it got sold to Apple for so much money, but there's so many different opportunities around the world around finance, open insurance, and being able to change from one provider to another through open APIs is key to technological advancement in the future.
I'd heard 250 million.
Well, Freddie never gave me cut, so we'll leave it at that.
Excellent. Kellyann, I want to go to yourself. Have you got any real-world examples of payments as a service and open banking?
So I want to take it down and be a bit less complicated. Sometimes it's really interesting to try and explain things in a different way. And so open banking, let's say as a whole, can be seen as, or let's say old banking beforehand, just one room and one door you go in and out. And it might be with NatWest, for example. But now with open banking, it's as if you have your one room and there's 6 different doors. And those doors all open up to other doors, which could be Monzo or Revolut or a cryptocurrency exchange. So it's just very much around how can we make this as safe as possible and make it as understandable and explainable as well as we move forwards. And so that was the example that we were speaking about previously, Ali.
Okay, we're going to come on to that because it is also about the safety and the risk around this, because no one's going to use it if, A, it doesn't work, it's not commercially viable, but also if it's massively open to fraud. Matt, I haven't heard from you yet. Give me, please, a nice real-world example that you've seen of open banking and payments as a service.
Before I just answer that one, I think when we talk about open banking, right, we talk about it as very often as a UK-specific use case, right? And it's not. There's 70 countries in the world that have different forms of open banking. And you mentioned PIX in Brazil, which has got 70-80% of adults using that on a monthly basis. We've launched it in UK with kind of faster payments. It's PSD2 kind of backed in Europe, but Ideal in the Netherlands is also a form of open banking that's simply branded. You have 80% of people using that there. You have Sofort in Germany, which again, it's kind of branded, but essentially it works the same way. At the end of the day, open banking, which we being in payments call it open banking, is nothing more than a account-to-account payment that is approaching real time. In some cases it is, in some cases it soon will be, but essentially it is a real-time account-to-account payment. So if you look at the countries where it's already operational and it already has mass consumer adoption, essentially the use cases for payments as a service is everything. If you look at places where we're operating, and essentially what we do is we provide a open banking account-to-account service to merchants and to PSPs and other players in the payment ecosystem. It's everything from account top-ups to your trading account or your crypto account or your investment account. It can be things like paying for a down payment on your car at the dealership. So we have an example of that. We have essentially a large chain of dealerships in Brazil that we're working in powering, where you can actually pay for your service and you actually pay for your car with PIX. You can do, DHL is a customer of ours in Europe, where essentially if you're sending a package, you can pay that with an account-to-account payment transaction, right? So essentially it's anything that you are paying today with a bank transfer, account-to-account payments can replace that and do it better, faster, and reconcile it better. Anything that is a credit card payment, or most things that are a credit card payment, you can have account-to-account payments as an alternative to that, or whatever other way that you're paying. So there's the use cases for it are many.
There you go, Olivia. A couple of examples there for you. Some new ones there for you as well.
Yeah, I didn't know about the credit cards being the most popular.
I didn't over until a few seconds ago. I'm definitely sticking with that. I do want to go back to you now, Stephen, because we've got to talk about VRPs. And we'll go back a bit. Direct debits, love it when a direct debit, you don't know what the date is going to come out until you kind of see it pop up. It's a bit old-fashioned. Let's talk VRPs. What have you done at NatWest, and what's the result been? And off the back of that, what results do you want to see with VRPs happening?
So it's probably worth kind of starting with what a VRP is, variable recurring payment. So basically a customer is setting up a long-term consent with kind of set values for the PIS to be able to take customer not present payment within that perimeter. It's not just about direct debit replacement. It can replace card on file. It can replace continuous payment authorities and standing orders. So when you look at it from a consumer point of view, it's secure. You don't have to pass your card details or your account details about setting up a direct debit. From a merchant point of view, you're getting semi-instant settlement. Not quite, but it's getting there. And if you look at what we've done as NatWest, so we're one of the CMA 9 banks under the order. We had to build VRP for sweeping. But the way it was designed, and sweeping is quite limited to a kind of transactions between the customers, same account and the same name, when the commercial opportunity is way beyond that. So what we've done at NatWest, both on kind of as a bank, but also as a PISP in terms of pay it. So as a bank, we've signed 7 deals so far with PISPs. Some are beginning to come to market now, but really we need some other banks to actually join the ecosystem, because if the PISPs go and speak to merchants, merchants go, well, 16, 17% market share isn't enough to justify their investment in doing this. But then what we've seen on the pay it side, so we've got VRP working live. We've done it with a charity, but we've also done it with a plumber's merchant. And the B2B scenario has been really interesting for us, because we've actually found that sole traders, small plumbing businesses are actually quite happy with the experience. And yes, you've still got some who prefer to have a manual process, but quite a few like the convenience of being able to set it up, go into a merchant, go and get what they've ordered, supplies, walk out with them, and they get invoiced and paid for later. The merchant likes the convenience that actually all these companies are running kind of credit lines with them. If they feel that somebody's coming, close to the top of their credit line, they go and phone up the customer and say, do you mind if we go and take £2,000 payment? And the customer goes, that's fine, or take it tomorrow, that'd be better for me. So it's giving both sides more flexibility and more control about how they manage their business, but it's also removing friction. It's literally, you don't have to pay for the goods, you just walk out. So that is something we're now interested in seeing what other opportunities there are in that space as well. And if I kind of look to the future, I think VRP will get going once you have a major retailer coming in. VRP at the moment has kind of natural use cases such as bill payment, things that replace direct debit, standing orders, etc. That's where you can see HMRC and you can see credit card bill payments so popular, and also topping up your secondary account. But getting a big retailer will be a game changer, I think.
Let's throw this open to the panel. Is this VRP, I suppose, compared to, say, a direct debit, is it a big enough improvement to warrant a change, or is it, what do you think is holding back these big retailers jumping on board with this? Panel, over to you, if whoever wants to jump in first.
Start with this one. I think, first of all, I think we need more banks, right?
Yeah.
To make sense for a merchant to actually enable it. As we talked about, VRP, variable recurring payments, comes up on a regular basis because they're keen to understand when can they enable it, when can they actually offer this as an alternative to card on file or a vaulted card. And I think the ease of setting up a VRP, there's less friction there than with a direct debit. And also, from what I understand, and keep me honest here, you also have more control over the number of transactions that are enabled, the velocity, the limits that you can set on it, the way that you're able to manage that within your account.
Yeah, and the customer can actually see it.
Exactly. Right. So I think that's from a customer point of view, there's much more benefits in terms of that. From a merchant point of view, they want to be able to provide that to customers. This is backup. Okay, redundancy.
Just to get you in stereo.
Get me in stereo. Oh, there's too many of me. So just lost my train of thought there, but I think from a merchant point of view, so the feedback that we're getting is, yes, we want it, yes, we are willing to pay for it, but we need to have more banks, which is one thing. And I think the other big question mark is, how do we actually get this in a unified way? So NatWest has developed it in kind of their own way, their own standard, their own pricing. Can we get this all unified, that it's simply one price for all the banks, one solution, or do we need to go bank to bank to bank every single time, right, in terms of actually plugging it in?
Up to you, Stephen.
Well,
I think you can speak.
And I think that's ultimately where the PSR will go. So ultimately, I think you'll see some kind of VRP payment arrangement in the UK market with that kind of harmonisation of experience, because you're right, it needs to be there.
Anna, do you want to weigh in on VRPs?
Not really.
No? Sweet.
But I can say that it's always about the cost-benefit analysis before you implement anything like VRP. If I'm a merchant and I have direct debits already set up with GoHenry or whatever it is, do I want the friction and hassle of changing that? Or do I want to stay with these depending on the cost and how much money I'll make extra by having VRP rather than traditional direct debit methods? Plus around the fraud in terms of whether the banking system is actually set up correctly for VRP compared to normal direct debits, because a lot of banks that I've read about have batching systems, so they pretend like they have the money there as the customer, whereas when the bank's going to take the money later on, it's not actually there, and the merchant loses out on the goods, and there's a whole risk around it. So I think that the whole VRP section itself has to catch up with the 30 or 40, 50 years of card payments and direct debits experience around risk that's not actually been addressed significantly yet in the open banking world.
That's I suppose the biggest obstacle with open banking and any account-to-account payment, just making that much simpler, is changing people's behaviour. Like, you walk into Sainsbury's, you know how to pay with a card. If there's a QR code to pay with instead that links to an open bank, whatever it may be, it's not as obvious to them because they're so used to their behaviour. Let's talk a little bit about risks, because banks have got to do a couple of things, and one of the things they've got to do is mitigate risk. And traditionally, I don't think Stephen would mind me saying, but banks can be quite risk averse in some fashions. I'm going to go back to you, Alan. Open banking, payments as a service. What are the less obvious risks that are overlooked a wee bit?
Well, my company, KYP, was set up to monitor TPPs, third-party providers, in the open banking sphere. So you can set one up for like 50K to 100K, pass all the regulations, go through a consensus check, and you have access to information and payments in a banking environment. But how do you know the risk of a TPP? How do you know they're not exposed to fraud? How do you know that their customers are not being harvested, their data is not being harvested on the internet, and they're being used to access banking and open banking APIs? And the risks around TPPs are not currently understood. Like in the past, when Google Play and all the app stores got opened, people created casinos online in order to harvest customers' information, to steal credit card information, to rob people essentially of their data, of their information. And in the open banking world, that exposure remains the same. If we can harvest dark web data, go and access a bank account through SCA, through AI, you can learn voice verification within 3 seconds to 5 seconds of talking. So all the traditional methods of SCA and security around even the normal traditional methods are gone. And the real risk around TPPs is if they're set up for nefarious activities and they're accessing banks all the time, how is a bank meant to shut them down? Because they can't shut them down unless they can make the FCA aware there's a risk of fraud. So all the risk around the TPPs is there, as well as on the consumer side, customers' data being stolen, banks not set up because they don't have access to the data. Now, traditional payment methods have IP, device, email scoring, et cetera, In an open banking transaction, you have the TPP name, number. I know it's changing in the future, but is that good enough to determine the risk of a transaction? And at the moment, I think like a lot of transactions over £250, for example, would be straight away declined by a bank because they haven't got enough information to verify the transaction. So that's not leaving the open banking economy able to scale as quickly and as fast as it would.
I would really want to highlight something you said there, because if anyone in the audience is doing the little tweets of kind of quotes, you said a quote there that I think is so important. Third-party providers, what are the risks there? Well, like with Google Play, we don't know. We don't know what they could be doing, and so to try and play against them, we don't know what it could be because we don't know what they're doing. So it is about being flexible. Yeah,
and with KYP, we continuously monitor third-party providers. We constantly look at credit checks. We look at dark web. We look at ransomware attacks online. We look to see if their customers' details have been exposed. So that makes the banks more protected against when a TPP goes rogue. You want an alert to understand the risk of that TPP and take action. And they're the sort of security concerns that you need to build up around the whole infrastructure. And not in just the case of TPPs, but on the consumer side and on the bank side, and make sure that all the processes and systems are set up in such a way that you can react to fraud, you can stop it, and that fraudsters, as I would, straight away, as soon as a new payment vehicle comes out, if I'm a fraudster, I'm all over that. I'm like, what's the gaps? How much money I can make? How can I monetize it? Where is the code that I can expose and put it on OpenAI, look at the gaps in the code, and then monetize the hell out of it as quickly as possible before we change to a new payment vehicle. So the banks have to really, and the system really has to catch up before open banking and payments as a service and POSP payments become nationwide and frictionless and easy for the consumer, because that's what's for at the end of the day.
Kellyann, I've got to get you to weigh in here. We've got some risks out there. We've got some third-party providers. What can we do about it?
So as a whole, FinCrime Dynamics, we try to look at financial crime dynamically. So if I just give you some figures to start off with, in the world, 213 billion is spent on compliance annually, which is quite a large number. And now we take it to the UK, which is where we're all sitting today. That actually works out to £22,000 an hour. So this talk today is about 45 minutes. So already, nearly, you can see how much money is being just gone on compliance. So what are we doing about that? As we go through new processes such as open banking, we have to try and look at what these risks could be. So within our startup, FinCrime Dynamics, we create vaccines. So it's a FinCrime vaccine. And what we do is we model data, we model crime, similar to how you might model a virus, and we inject it back into the institution. And so that institution, cryptocurrency exchange, NatWest, can start to build up their defenses and slowly become more and more protected. So in regards to this space, very much it's about understanding how we can use synthetic data and run simulations on that data, not just about what crimes are happening today, but what could be happening in the future. So similar to what Alan just said about we don't know. We don't always know what we don't know, but we have to try and think creatively, have our professionals on board. A little bit earlier, Matt said about getting more banks on board in general. So it's about looking at the big ecosystem. How can we collaborate in a safe and secure manner? And in regards to synthetic data, that really does help. The main points about synthetic data is it's scalable, it's a data analytical twin, and it's also client sensitive, which means particularly in our area of finance and also in the medical world, it's used over there as well, it's particularly relevant. And then doing these simulations, you're able to actually visualize what could or potentially in the future could take place. If we think about open banking, is this something that we had thought about, let's say, 10 years ago? Or APP fraud, was that something we knew about 10 years ago? Crime's always changing, viruses are always changing, and we just need to be as open and collaborative within our ecosystem to try and prevent the criminals stealing lots of money.
I don't know, it's so much easier just to stick your head in the sand and pretend it's not happening.
Of
Is that Matt?
I actually have a question. So when we look at open banking, so you talk about open banking, I mean, there's really
explode and MS should be.
So when we talk about open banking, there's really two parts to it, right? So there's the account information services part where I can access by consent somebody's account to be able to get either account ownership information, transaction history, pull different data that they consent to, right? And that's kind of the fraud that you're talking about in terms of my data going out into the world. And the other one is around initiating a payment and actually making a payment and then the merchant receiving the funds and then providing the good or service. So if I were just to focus on that second one in terms of payment as a service, how would you compare the riskiness of a account-to-account transaction versus a credit card transaction? Which one is more risky and why?
Is that my question to me?
To either of you, or to anybody. But
Yeah.
The risk guys.
POSP payments from the bank side is a lot more risky because there's not enough checks and balances in place, and the processes used internally on the banking side are maybe batched, right? So when you go and make a payments as a service payment, the batch processes may take place at 12 o'clock. Whereas instantaneously there's loads of rules, systems, models, FeedsEye, FeatureSpace, Xeon, there's Ravelin here today. They're all expertise at real-time transaction monitoring and process thousands of transactions per second. In the payments as a service space, banks are not set up correctly to accept a payment over 500 quid. They're declining most of them. So they're saying the risk is too high to accept that payment because there's not enough information about the TPP, the person, the models and the risk and the rules you put in place previously are not available in the open banking space yet. So the banks are not willing to take that risk because they don't know enough.
I would strongly disagree with that.
Right, Stephen, let's get you in here.
Hold on a second. Why are most payments over 250 quid declined then?
None. No. We processed a payment last week in the UK, topping up an investment account for £300,000, went through like a charm. We continuously process payments above 250 quid with no declines because of risk toggles and so forth. So that's why I'm kind of.
But maybe
and our average open banking payment value is about £300-400.
So I'll go in the middle here and I'll say, I want everyone to visualize a nice diagram, an X and a Y, and you have cost detection and efficiency along the bottom. And in the bottom left-hand corner, imagine a rule-based approach. Generally speaking, that's what's happened historically. And as we move up this chart, we then have a tree diagram, we then have scenario-based testing. And at the very top, highest amount of detection is when you're moving into machine learning and AI. So that's where you're looking at models, how they're changing. So perhaps now where Alan's mentioned the 500 mark and you've mentioned the 300K, I think ultimately the groundwork behind the scenes previously we can adjust how many years we want to say, but ultimately it was rule-based, and we all know that. And now we're moving progressively and slowly to the machine learning era, and we do need to be careful about our AI models, how are they being trained, and in essence, perhaps even have a less complicated algorithm that is explainable, but actually we know what's going on. Because ultimately, we're all in the world of banking, money. We all care about our own money as well. So we have to think about trust and transparency. And so I think regardless whether it stops at 500 or 300K, it's about how are we actually looking at our models, what's the difference between the model training and then also our algorithms, so that no one's just in this dark space, that we don't know what's going on.
Can I try to simplify that a little bit? So, I mean, I think what you guys said is
You didn't think my diagram was simple? I mean, I tried to visualize it.
Tree in the middle.
And I agree with the AI point, especially programmable payments is a whole different world we haven't touched yet.
Definitely.
Yeah. No, but if I were to really simplify risk in kind of the different types of risks, so you have risks on the side of the bank in terms of, do we send this money, do we not send this money? Question is, to what extent is the bank with open banking taking that risk on themselves or not? You have the risk of the consumer, which is, am I actually going to get the good or service that I've paid for? And then you have the risk of the merchant in terms of, am I actually going to get the money that I'm supposed to get? And I think what you mentioned, Alan, at the start, which is very interesting, is around whether or not the payments are batched and whether or not they're instant.
Yeah.
And I think that with what you have with SEPA Instant in Europe and what you have with faster payments in the UK, the payments are not being batched. Very few banks, there are still some banks in Europe that actually do batch SEPA instant payments, that's a separate story, but 99% of the time, those payments are not batched. They're actually dispatched at the moment of payment.
So I have a question for you then. If you're making an acceptance payment for 300K, what enhanced due diligence did you do beforehand, before you accepted that payment? Was it just someone logged online and the payment was made instantaneously, or is the whole KYC, KYP process on the customer side and the TPP side and the transactional side, or just like instantaneously happen?
Well, if it's a institution that we've onboarded, then we've
Then
done...
you onboarded them, so
Yeah,
you
no,
went through a whole
but-
KYB process.
But again, answering your question, so if it's an institution that we're onboarding, we've done full due diligence on them to be able to onboard them, be able to make sure that they can accept payments. They then have a process in terms of onboarding their consumers and doing checks on them, whether they're certified investors, whether they actually have what the source of funds is, et cetera, et cetera. And they then also have risk rules in place to make sure that that first payment that they do as a top-up is probably not a £300,000 payment, but others before that. Now, if somebody hacked into their account, then, well, that's kind of a completely separate story, and that then goes back to bank security and secure customer authentication and so forth. But I don't think it's a matter, I mean, that's kind of a separate topic altogether, right?
Well, like the reason why I mentioned the 250.
We're going to move on for the risk bit though, because I
Sorry,
need you guys to
sorry,
battle it. You can battle it out later, I'm sure everyone will be there. I do want to get some audience questions in a bit and get these lads all involved, but the last thing I want to kind of throw open, and let's get James back involved. Come on, James. I want to know about, like, we've touched on some of the risk, we've touched on what it is, we've touched on what some of the, I want to know what some of the unexpected opportunities are. Like, because there needs to be motivation for that. There's obviously commercial opportunities, but you have opportunity cost. I want to know what the opportunity is. So, James and Matt, I kind of want to get you guys to weigh in here. What are some of the unexpected opportunities before we go to the audience for questions?
Yeah, I think high level kind of time efficiency, accessibility. I mean, certainly from a kind of OBE perspective as a community, we kind of focus around the industry collaboration. We tend to, from these kind of community conversations, whether it's our monthly campfires, our roundtables under Chatham House rules, kind of unveil them. And I think that's a great kind of way of bringing a community together to talk about things that, sometimes are not, straightforward. So I'd probably go to other panellists for kind of some granular examples on the opportunities.
Kellyann, any extreme opportunities that may not be, not necessarily extreme, any opportunities that may be often overlooked? Like, what's the knock-on effect? What's the long-term impact that focusing on open banking can have?
I think as an overall, I think that open banking is, today 6.5 million people in the UK are using open banking. It's going to come around eventually. We need to be as safe as possible. In regards to the large opportunity spaces, perhaps looking at how we've created this space. So we had, let's say, a product. We've sort of unbundled that product, and now we're rebundling it. So in essence, it could be that someone's a musician and they have absolutely everything that they require for their banking needs straight away without having to go through any additional checks. But opportunity-wise, there's the more that we can collaborate and keep things safe, then I think the opportunities are endless for creativity in this space.
Right, audience, let's get the audience in here. Right, audience, do we have any questions? Yes, to this gentleman here. Let's get him a wee microphone.
Hi, Matteo, work for Wayfair. Was interested in understanding perspective on what do you think is going to be the future pricing for open banking, like on average, like where things are going to be converging from a pricing model perspective, but also like what is the basis points or like what is the target that you envision in the long term?
Right, is that to anyone in particular, or is that to whoever wants to? I think Stephen's like, I want to weigh in on this. In you get, Stephen.
As much as possible.
No, because that's not going to be. So the pricing has to be based on a value exchange. And pricing, at least initially, has to be in the region of debit card interchange. And I think the key thing is not actually sorting out that pricing. The key thing is sorting out faster payments pricing, because that's what's going to kill this. So if you as a merchant are being charged 35p for receiving a faster payment, forget about what you're paying for the actual payment itself. That's going to be what kills you. So sorting out settlement and settlement accounts and how you have cheaper pricing for faster payments, I think is key.
There we go. Audience, any other points? Yes, to the gentleman right there, who I can see in the darkness.
Thank you. Ben Orgill, Ovo Energy. As a very direct debit heavy business, I'm very excited about VRP, and I'm a big proponent of it, so I'll just caveat my two small questions with that. And they are both really targeted at Stephen, I suppose, but the rest of the panel. The discussion around how VRP will be adopted by the market, I agree 100%. It needs banks' involvement. But I think it was quite a merchant-heavy view. What's your view on customer protections and that engagement for the market in that space? I foresee a world where even with full bank participation, with the level of customer protection that we have at the moment on a VRP payment, a certain money-saving expert will be making a tweet saying, don't do that, do a direct debit because you can get your money back if something goes wrong. Finally, my other question is, and we mentioned earlier, there is the AIS and the PIS element of open banking at the moment. That is very frustrating in the fact that we both then have to authenticate twice to get those services. Is there any appetite for a combined authentication for those services so that we can move to a more smart service? You know, VRP is great, but a smart VRP will be better.
Two good questions. I think on the customer protection is also a JROC thing. There's one of them not in dispute. So JROC and regulators are looking at this. Something will have to come into the market. But I think if people are expecting to have full kind of Section 75 and kind of card scheme customer protection, that's not going to happen anytime soon. If you mention Ideal in the Netherlands, Ideal has no customer protection.
There's so forth.
And if you kind of think about, if I'm paying a bill, or I'm paying, even if I'm paying for my shopping and my groceries, I'm going to consume them immediately. The level of customer protection is very different that I need there to if I'm booking a holiday or a hotel or something, or a sofa that's going to be made and delivered to me in 6 months' time. So I think there's very much an approach developing in the industry to look at it on a use case basis, and that really being clear, at least initially, from a customer point of view, where do they go to in the first instance, depending on the nature, and what's the difference between payment protection and kind of goods and services protection as well.
Any of the other panel want to weigh in on this? Around VRPs?
I was going to say around risk around especially digital goods. If you have access to the customer's information, it's harvested online. You can pay for a digital good, you can pass the SCA and then receive it straight away, and then the customer is not protected against that payment at the moment. So that's a big risk at the moment in the open banking space. Now, I haven't got a solution for it because I'm more on the merchant side, but it's a consideration for any consumer because they think when they make a payment online, they're inherently protected through chargebacks, whatever it is, because it's a new payment service. All the other levels of protection for the consumer aren't there at the moment, which everybody has to combine and work on together before maybe more consumer adoption.
I'd agree with that, and I also think that you've got to have the same level of information exchange that you get from cards. So to date, transaction risk indicators, merchant information, doesn't exist in the open banking payment. Yep. That's also got to come in as well. And sorry, I've now forgotten what your second question is. Can you mind repeating? Yeah, I think the challenge there is that there's got to be some incentive for me to go and build that journey. I agree with you. And one of the things that's being looked at, that we're looking at, is in the payment space and commercial VRPs, combining like consumer attribute data and actually being able to confirm, like, you know, they are over 18 or whatever. But that's the challenge when you have a regulatory-driven mandate, which is based basically on equivalence of direct channels. So to go to beyond the regulatory mandate, and we have spent a fortune complying with PSD2 and open banking, there has to be some commercial incentive to go and have that investment again. But I do agree with you that I think that needs to happen.
It's a very candid answer. I appreciate that, and obviously ties in with what we were talking about right from the very start of the session around what is the commercial reason for this in terms of real-world examples. We've literally got a minute left, but I just want to basically say again, thank you very much for the panel. Anyone in the audience have a statement to make or a quote? Oh, are you putting your hand up to say a quote? Yes?
We've just had one related question come in on the app, which is all about VRP. So I wondered if I could just put that to you before you break entirely.
Go on then.
Why aren't other banks following NatWest's lead on commercial VRP in the UK?
So we were probably slightly different from the other banks right at the very outset. So when open banking and PSD2 were all first talked about back in 2016, early 2017, we actually looked at data sharing and decided that data sharing was more of an opportunity than it was a threat. And that's kind of guided our kind of strategy and thought process since then. And when you kind of look now as well that the PSR wants to kind of have increased payment options beyond the existing card schemes and existing payment methods. So we know there is pressure and a wave coming that they want to have more options into the market. And we just saw actually this is an opportunity, especially if I'm being totally honest, we don't have an merchant acquirer business. And you can see the direction of travel is pretty clear that account-to-account payments are going to happen one way or another. Mm. So you better get test and learn now. Then, and I think to that question, other banks are beginning to come around. But some of the things people have talked about already, consumer protection, that's been discussed as a kind of a barrier. Pricing has been discussed as a barrier. Having a consistent journey and kind of it's going to be a scheme around it. So I think those are some of the obstacles. And even talking to some of the challenger banks, their view is as well, actually at the moment, we're not going to justify the investment until there is a bit more kind of the end-to-end journey and end-to-end experience and kind of guidelines and rules in place.
So basically everybody needs a kick to hurry up and get going, I think is every chance.
Right, guys, we're out of time. Thank you all so much. How did we do, audience? Did we answer your questions? This is the best panel you've ever had about payments as a service? Yeah? Yes, excellent. Thank you very much. A big round of applause for the panelists, please. I want to take a quick selfie on stage, and then we'll get off and we'll let Amelie jump on stage for a bit. Why not? Smart, guys.